All right, everybody. Wanted to make a video on. I had this conversation today, and then I realized, wait a minute, I have a chart that shows this, and I should make a video about it. And so I wanted to show you briefly just a little bit more about the market structure. So if I zoom out, what you're going to see is this is not logarithmic, but it's really kind of showing you the white lines are the Bitcoin halving. So this was back in November 2012. This is 2016. This is 2020. And then it's probably going to be April of 2024 right now. Currently, if you look at the number of blocks, it's going to be right around the middle of April. So middle to late April. So with that being said, kind of looking for some trends, looking for some confluency. What is it that stands out? I'll skip this one. I'll just even use, it's the same, but there was less trading volume in the first market cycle, so it can't be as accurate. But either way, this is simply speculation anyway. So here's my opinion. It definitely ran up for 526 days, kind of during this last market bull run in 2017. In this one, in 2020, 548 days, right? We're having diminishing returns from the very first one, 367 days. This one took a little longer. This one took a little bit longer. This one had the highest returns, 9,000%, 2,800, 650%. The drawdown here over 400 days was 84%. This is 363 days, which is pretty similar. It was negative 83%. And really, if you kind of map this out, it's almost 400 days, right? It's getting closer to 376. But these are all in the ballpark, 400, 300, 300 something. So, I mean, that's pretty cool just to see kind of that confluence from the top to whenever the bottom was. Now, with that being said, we also have negative 84%, negative 83%, and this time was negative 77%. And so what I want to show you is this, is the reason I kept saying, hey, I think it's going to go down, I think it's going to go down, is primarily because if you look at this market structure, it ran up, totally came down, sold off, we found a bottom. And then what happened? Then we started running up. Hey, it's the new bull market, everybody, we're going to get super rich. And then it kind of topped out somewhere before selling off prior to the next halving, and then it starts to climb right before the halving because of the anticipation and the supply and demand, right? So it's almost just like we're too early to start climbing. If this really is, hey, the new bull market, it's going to go up from here, we're never even going to see $30,000 again, then the new all-time high will be pretty astounding. It should be really, really, really high, which would be great. But more likely what's going to happen is we're going to repeat what we've done in the past. Back over here, back over here. You can look at almost any chart and see something similar to this, where we get this big bullish drive up, try to get all the speculative buyers in, and then we're simply going to short and accumulate our positions lower. Now, even with this one right here being COVID, you could take it out and you could see that the trend line was still going down until it broke, right? That's fine. It's still the same concept. And so with that being said, what I think we're going to see is, number one, this is pretty unstable. Can't just go up forever kind of thing, but I'll explain why I think it's going to go up to, like I said, 48. But really, if you were to look at kind of top to bottom here, it's like a 70% retracement. And also check this out. And this one's kind of let's take out COVID. I'll even be more conservative. Let's just take out the COVID thing and let's just literally look at this bottom even. Let's just say this is the bottom. What are you seeing here? All this support and resistance right through here, right? If you move it up, you move it down, you can paint the story whatever you want, right? But you see my point, right? It was coming down onto this level of support, maybe this level of support, this level of support came up. Now we had this big, if you want to isolate that, cool. If you want to count it, well, guess what? You know where it went. It went down into this consolidation. And so it's kind of very similar. So if we copy that and we do the same thing, where's going to be the consolidation this time around? So if it's going to go it's going to go up somewhere, not up here. It's going to go up somewhere, then it's going to fall down prior to going to, you know what I mean? The bull run is going to start here. Technically, you could consider this the bull run, right? Just because it might be a final low. But if it's going to fall, probably what is that number going to be? It's probably going to be in this consolidation range, right? You have a couple of them. You have one right here at $30,000. Shocker, right? Big shocker. It acted as such massive resistance. Now we're going to flip it. It's going to act as support for a second before we can go up. Not a surprise. If it's not that one, where's it going to be? It's going to be this $25,000 level that's been, same thing, similar, especially because you kind of have an inverted head and shoulders here. Here's a shoulder, here's the head, and then here's another shoulder. So that would be very bullish, right? And so that is going up. So the resistance really should have been in this channel. It should have broken out and sold back off. It did not sell back off. And so really more likely, what is that probably going to be? It's probably going to be that it's going to go up. Now it can stop at any time, right? It happens to be at resistance right now that you can see right here, right? Where this was, but we don't know if this is the top at 36 or not, right? It did go up to 38. Like I said, it might hit 38, 40, 40, I think it was 2. I'd have to go check. It's whatever. And then 48 being the top. Where's the 48,000? It's like right in here. So if it goes all the way up to 48, that is roughly, that is roughly a 30% drop, right? We'll make it right at 30 and see where we're at. 46.6. So pretty close. I say exactly. It's probably not even exact. But a 30% retracement would not be crazy. Now the question just boils down to, where does this stop and what does 30% look like? Well, if we are at $48,000 and we go down 30%, what does that put us at? So our pullback would come to about 33,000. So could be interesting. We also have several other factors that could lead to this. But again, this will eventually have to stop at a certain point and we'll have to retrace. Things that unstable. In fact, the higher it goes, the faster it goes, the more likely it is that it's going to come down. Again, I'm a trader, so I'm not necessarily thinking about, oh man, we got to go all in. Like, great, go all in. There's another problem with that. I'm personally just staying in some cash to be able to do these types of trades where I can make money when it's going up, and then I can definitely short it when it's going down. I did exit my short position the other day when I told you I took a small profit, and so now I'm waiting pretty much for it to make a decision. And if it goes to 38, if it goes above 38, I could see it actually climbing all the way to 40. Then we'll see if it goes all the way to 48,000. But with that being said, I just simply wanted to point out the structure here of what looks like such a bullish, like this is it right here, right? This is what we're looking at. It's not. It's this, right? We broke out of the lows. We came up. It will sell off a little bit because, again, too much momentum in one direction is just overwhelming. And then it simply needs to find a new channel, which typically will balance on top of other support and resistance like here, like it did over here. So we've spent a lot of time around 30,000. It would make the most sense to me, since we have all this, we have all this, we have all this, we have all this. It would make the most sense that it's going to go up and come back down to $30,000 before eventually taking out. But that may not be a big enough retracement. It may have to come all the way down to 25,000, or like what we've talked about literally the entire year is this $21,000, gap that isn't filled on the CME futures. And it could be very quick, but if you had cash that was sitting in here and you just set it to buy Bitcoin at $21,000 and you left until April, it might have gotten filled. We don't really know. So anyway, thought I would share just kind of some interesting Confluence stuff. Again, I like seeing, similar patterns, right? 300 days, 400 days, and then over here, the climb is 500 days. This one was 500 days. This one was 363 days. This one was 376 days. Like, okay, great. I like seeing those confluences. 513 days to the next halving from the bottom. I have not counted it, but maybe, there you go. April 17th is 513 days. So there you go. There's another, that would be another support for the conversation of this could be the bottom. Again, not that it doesn't get revisited. I'll show you that here in a second. And we could sell off and then we could start climbing back up. I think if we're going to sell off, it's going to happen relatively soon though. As the recession potential keeps getting kicked the can down the road, kind of a thing again. The reason I say that it could go down to 20,000 is because was COVID an anomaly? Totally, right? But here's the thing. It still happened, and it's not the first, and it's really not the last. And so, when Bitcoin was, look at this, up here at $13,800, it went down to basically $4,000, $3,975. It was only for a split second, but it was to fill a gap. It was to, like, there was some level of support in this range that told enough buyers to go and buy, right? And so they did, and they bought it back up, and there you go. So just don't be surprised if that same thing happens and it really ends up being like, hey, it comes down and it really is $30,000. But whatever news or a threat of a recession or who knows could drop it down to 20,000 and then bam, we're off to the races. The other thing that could change a lot of this narrative is just simply what's going on in the ETF approval space. If an ETF gets approval, that could be a big part of it, but I actually believe that's what this is. I believe this is a lot of buying pressure to prepare for an ETF, which is really smart, honestly, because most of these people, if they're retail investors, which most retail investors don't invest this early and that kind of stuff, but if they do, they're going to be bought in. They won't care that it goes down for a second because it eventually will go up, right? They're not traders. But also, this could be some potential institutional money that has approval from regulators or their auditors. Smaller players. So anyway, thought I would share. Really hope that's helpful. Just kind of wanted to give you an idea of market structure and kind of how like you can continue to see, as I say, this is just simply a graphical representation of all human emotions, right? And what do we see? We see patterns. Why? Because we have cyclical behavior. We do the same stuff over and over again. And this is an aggregate of all humanity who's in the markets. And so we kind of leverage that to our advantage. So, man, best of luck. And just thought I would go ahead and share that. And we'll keep it going. We'll see what happens. We'll see if we see 48 first or 28 first.